Hello and good morning. This is Justin Macagba with CMG Mortgage and MLS number 414049. I wanted to talk to you today about a quick an item that comes up often when talking with the borrowers and whether they can afford to purchase the home that they want or if they can qualify at all, and that's student loan debt. Specifically today, I'm going to talk about whether or not that loan is in deferment or not, or in forbearance. When COVID happened, and today, again, September 29, 2021, a lot of people were put into COVID forbearance, meaning that the monthly payment that was required all of a sudden became zero. Everybody that was in a federal student loan plan, regardless if they wanted it or not, were put into COVID forbearance, meaning that they weren't responsible for a monthly payment. You would have had to have called in to say you wanted to continue to make payments, because they just sort of took everybody and had everybody go into into forbearance, meaning that when you're looking to buy a home, when you have your credit report pulled, it shows an outstanding student loan balance, but your monthly payment is zero, and that's the forbearance, and that's what we'll talk about today. So for Fannie Mae, Freddie Mac, so conventional financing, if that credit report is reflecting a zero balance and you have a $24,000 student loan, for example, Fannie Mae is going to require that 1% of that outstanding student loan balance be debted against the account, meaning that that ends up being the monthly payment. So $24,000, that's $240 I'm having to work into the equation as far as whether or not you can afford to purchase a property or not. With Freddie Mac, they say 0.5%. So that $24,000 then becomes $120 monthly debt, even though you're not making monthly payments on it. So that's conventional financing and the difference between Fannie Mae and Freddie Mac. With FHA this past year actually relaxed it. They were at 1%, but they're actually now at 0.5%. So 24,000 times the 0.5%, that's $120 a month I'm having to debt the file. USDA actually just relaxed theirs a bit. So if it's reporting a 0%, if it's reporting a $0 payment, that's 0.5%. The change with them is if you're on an income-based repayment plan, then we can use the income-based repayment plan. So won't go too much further into that because, again, I wanted to focus specifically on deferments and forbearances. And then with VA financing, their calculation is a little different. So VA is the outstanding student loan balance times 5% divided by 12. So 24,000 times 5%, that's $1,200 divided by 12. That's $100. So for each of the individual loan programs, student loan debts in deferment or forbearance are going to be looked at differently. If you have any additional questions, please do not hesitate to reach out to me. I'm more than happy to dive a little bit further and answer any questions you may have. But again, this is Justin Macagba with CMG Mortgage and MLS number 414049. Hope you have a great day and look forward to talking with you soon.